please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Crude oil prices are on the boil and the government is nudging oil marketing companies to ease the burden on consumers. But first, what's sending oil prices higher? US President Donald Trump and Russia are engaged in a war of words over the situation in Syria. President Trump just took to Twitter and taunted Russia after Moscow threatened to shoot down any missile fired at Syria. The Assad regime in Syria is accused of large-scale chemical weapon attack on its own civilians, and the US has threatened airstrikes to stop this. So the volatile geopolitical dynamics in the Middle East and separately a demand-supply mismatch is sending oil prices soaring in trade. The Saudi oil minister is in New Delhi and he made it clear that his country will not allow another supply glut to resurface. I'm just quoting him. A clear hint that Saudi and the OPEC nations could curb oil production even further. Listen in.
When oil approached $150 in 2007, Saudi Arabia was extremely concerned at that time, and we called for a major conference in Jeddah, Saudi Arabia, to try to cool the markets down and arrest that escalation. We will not sit by and let another glut resurface.
Okay. Well, with oil prices clearly on the rise, as the minister is hinting, the government is apparently nudging oil marketing companies to absorb a price hike of, say, 1 rupee per litre. This report that came earlier today sent shares of oil marketing companies stumbling down in trade. So is this 1 rupee absorption by fuel companies such a big deal? Prashant Nair is here to explain the numbers. Prashant.
So we are basically talking about apparently the government having told oil companies rather was the exact terminology. So we don't know if it is only downstream or it includes upstream as well, but having told oil companies to absorb a 1 rupee increase in the retail sale price of petrol and diesel. So this is essentially what sparked the entire sell-off. Remember, the government has already ruled out, to us on various forums, in the recent past, ruled out a cut in excise duty. So that's the basic news. There has been no statement really coming out from the government either confirming this or denying this. And this has been standard practice in earlier episodes as well. I'll get to that in just a bit. Now, absorbing 1 rupee, what will that mean? If they were to absorb a rupee, what would it mean? Oil marketing companies right now are making fat marketing margins. So the gross refining margin over the last couple of years was about 2.5 rupees or so. They are currently making around 3.5 rupees a litre on both petrol and diesel. So this is higher than what you'd say sort of call normal kind of marketing margins. 1 rupee absorption would essentially straight away eat into that gross marketing margin and take it back to about 2.5 odd rupees a litre, which is what the marketing margin was over the last couple of years. 1 rupee prima facie doesn't seem like it's such a huge financial impact. The extra margin which these companies were making will be shaved off. Will upstream companies share the burden? We don't know that. But if the answer to that question is yes, it will mean that the burden on downstream companies will be further reduced. What did we see in 2017? I'm going back to the last episode when this kind of happened, and this was around the time of the Gujarat state elections. We saw going into the elections for many weeks, there were no price increases even as global oil prices were going higher. There was no formal communication from the government saying that we've asked oil marketing companies not to increase, but we didn't see any hikes, and as a result, marketing margins were compressed. After the state election of Gujarat, prices were marked up pretty rapidly by oil marketing companies, and that's when we finally ended up at this 3.5 rupee a litre gross marketing margin. I think it's instructive to look at what has happened in previous episodes, because it may give us a clue as to what might happen now. What is the real worry? The real worry is that this year, 2018, is lined up with not just one state election, but a couple of big and crucial state elections leading up all the way to the general elections in 2019. So will we see a repeat of this stop-start kind of action by oil marketing companies going into a crucial election, no price increases, after the state election, they're free to increase prices, and sort of repeat? That cycle sort of continues. I think it would give a signal, clear signal, and I think the market didn't take it very well, because there is worry that even if these price increases, the cap on these prices are temporary, which is up till a state election gets over, this will impact sentiment quite adversely. Are we going back to the era when prices were regulated? Are we junking the entire deregulation sort of story? Because that is going to sour sentiment quite a bit. Back to you.
Okay, well, we don't yet know whether it's being junked or only temporarily held in abeyance, because this is what the chairman of HPCL told us earlier today about whether he was asked not to hike prices.
Sir, there are reports that OMCs have been asked by the government to absorb ₹1 per litre on both petrol and diesel.
We don't have any such input. I've seen some media reports coming up, and there were a lot of people were asking. We don't have any input, at least to that extent. Second thing is, the price not changing cannot be directly attributed to this. The pricing is a function of 15 days rolling price.
Okay, 15 days rolling price, so it may not be made to look like a government diktat. But is there a plan at all to ask oil marketing companies to absorb some of the rise in crude prices? Or will the government actually cut its excise duty on fuel? Last week, the Finance Secretary Hasmukh Adia clearly told us that no decision has been taken on duties so far.
One has to look at the need for giving relief to people, vis-a-vis also the tax revenues. And so if it is a difficult decision also, but if it is required in the interest of people, the government will take that decision. But as of now, there is no firm decision on this. If we take any such decision, we'll let you know.
Okay, so that's the Revenue Secretary saying no decision has been taken, so that's still open. Joining us to discuss further how the government plans to handle a possible rise in crude oil prices all the way to perhaps 71 or 75, Narendra Taneja, National Convener of the Energy Cell for the BJP, joins us. Good evening, Mr. Taneja. Thanks much for joining. Is this now a decision taken that any further rise in crude prices is not going to be passed on?
No, there is no such decision. As you would appreciate that the government is the majority stakeholder in these three OMCs, and regular consultations do take place, you see. And I think at this stage, all that the consultations has happened is only on this aspect that, try to be more efficient and try to get better deals when you're sourcing crude oil, and try to have some benefits so that, extra benefits which you can pass on to the consumer, so that the consumer burden in terms of your pump price, can be reduced a little bit. But that's what it is. It does not mean or does not really amount to government going back to the old regime or, start regulating or start giving directives and all that, because there is no such plan. It's just that, just try to be more efficient. That's it.
So what about this agency report that the government has asked oil companies to absorb ₹1 per litre?
You see, government has not asked anything. These are regular consultations. Very often, you see, when you are a government majority company, you have advantages, you have some disadvantages. Advantages are when you are going overseas, you can use the might of the government and get better deals from oil producers, which is happening right now in Delhi also. Government is assisting Indian oil companies. And at the same time, but when you are a kind of government company, there are some consultations also. And government can sometimes say, look, the consumers are complaining. Why don't you look into it? Try to be more efficient so that the burden can be reduced. That's it.
Yeah, so, as my colleague was explaining, at the moment, marketing margins are fairly high compared to the average of the last several years. So is it, since the margins are over 3 or 3.5 rupees, is there an indication from the government that it should mean revert and go back to, say, 2.5, which would amount to ₹1 per litre?
No, not really. I mean, the government understands business as well when you are running such large companies. I mean, if these companies are making more money, the government will get more bonus.
Okay.
Government will also get dividends. So it's the same way government can use that money in order to pass on to the consumer. Whatever comes to the government goes to the ordinary people, you know, different plans and projects and so on and so forth.
Yes.
So I don't really think so. The whole idea is basically just to tell them that, look, this is what the government thinks, this is what your consumers, the biggest stakeholder, these companies are owned by the government on behalf of the people, and people means consumers.
No.
That's what they are saying.
Yeah.
Just try to be, you know, just try to be a little bit more smart. That's it.
So, you know, in the run-up from April 1 to April 15, it is very, very likely that the average price of crude is higher than the average price of the previous 15 days, because that's what the arithmetic is indicating. So, are we going to see a price hike on April 15th?
You see, first of all, it takes about 20 days to 1 month. If, for instance, today if the price is $71, before it actually reflects at the pump, it will take minimum 20 days.
Okay.
Now, my own assessment is that, crude prices are not really going, probably will not be able to sustain at $71 per barrel.
No, assuming they sustain, sir. So, assuming, hypothetically, Mr. Taneja, hypothetically, assuming it is $71 for the next 15 days.
Well, good question. You see, I think if there is a situation like that where the oil, for instance, sustains the $71 per barrel, then I think government will have to do something in terms of looking at what the government can do in terms of taxes. State governments can be asked first to reduce taxes. In fact, the center has already asked the state government to do something in terms of VAT and sales tax that they collect. Okay. And at the same time, discuss with the company these matter. Okay. But to say that the government will go back to the old regime where everything was tightly controlled by the government, there is no such thought.
That is not even the suggestion, sir. The suggestion was only whether 1 rupee more is being the companies are being asked to absorb. And I'll tell you why this one wants to give credibility to this agency story. It's because before the Gujarat elections also that's what happened. The average rolling price hike was not passed on to consumers. It passed on after the elections. So will there be an action replay now that we have a major Karnataka election coming up?
Let me put it differently. You see, you talk to the consumer today. The consumers, you talk to opposition parties, forget about opposition parties, just talk to the consumer. Yeah. Consumers basically are saying the prices are too high and the government got to do something. That the consumers are saying. You look at local media, different parts of the country, that's what they are saying. And since the government being basically the government, they are collecting all this feedback and passing on to the companies and say, look, what can be done? And of course, one of the first things that companies can do is look at, for instance, can they do something about it, cut their own, cost, or try to be more efficient in terms of how their own expenses, for instance, transportation.
Cut their own margins?
Getting better deals from producers, refining. Maybe cut their own margins too if it comes to that. Okay. You see, because what is important is, like any other producer, like any other company, they have to look at all these aspects and then see what can be done. Okay.
Sir, that done, just assuming only hypothetically that, crude goes to $72 instead of, $69. If that were to happen, is an excise cut also on the table?
Good question. You see, the people in the Bharatiya Janata Party, including me, and there are many even in the petroleum ministry, there is this thought that if the prices go too high, then probably the finance ministry should consider doing something with regard to excise, which means basically bringing it down a little bit, which the ministry did, if you remember, 6 months ago. So that thought is there, and that thought is basically being widely discussed, because it's only when you do that you probably get more moral authority to tell the state that you follow us, you also do that. So I think if the prices go that level, the government job is also at the same time to protect the ordinary consumer, but without really, going back to an old regime. So something would need to be done, and at the same time, to looking at the market when the prices were low, the government increased the excise. So this thought is there in the party, in the petroleum ministry, but ultimately that's a decision which can be taken only by the Ministry of Finance. But ultimately that's a decision which can be taken only by the Ministry of Finance.
Okay, well, so going by what the Saudi oil minister Khalid Al-Falih, and we just played that soundbite to you, they are clearly looking at not allowing an oil glut to happen on the one hand, and given this tweet war that we are seeing between President Trump and the Russian statements, the possibility of high crude prices are there. So can I say, from all that you have told me, that this is the hierarchy? First, the government will ask the oil marketing companies to absorb maybe 1 rupee, and then it will consider excise and excise cuts, and then it will go to the states?
Well, you see, good question. First is that, you know, what Saudi Minister Khalid Al-Faleh said, he basically was talking about that but at the same time, what does it mean? If you read between the lines, he's saying that we are going to strengthen our friendship with Russia, which is a non-OPEC but a big producer, in order to push the prices up. They want Saudi Aramco, they want prices up because so they get better value for Saudi Aramco's IPO. They may want the prices to be $75 per barrel. Russia wants $80 per barrel. Okay. But the question is that at the same time, America's shale oil production is going up, and that is putting the pressure down, which means the prices will have to be somewhere in between. Yes. But having that the global picture, but coming back home, here is that, you know, the first, as they said, the companies have to do this thing. Yes. And after that, government will look at other options, and the options might include, as I said, I'm not speaking on behalf of the Minister of Finance, Ministry of Finance, but I'm saying in the party we think that, you know, something needs to be done, because at the end of the day, it's a political commodity, and if the vast majority of the people are saying that prices are too high, then being a political party, we'll have to think about it and respond to it.
Fair point. That's very candidly put and, of course, very rationally argued. Thank you very much, Mr. Narendra Taneja, for speaking to us and giving us the party argument. Just to complete this argument, I did speak to economist Pranab Sen, also former chief statistician, as well as to Ashima Goyal, who is member of the PMEAC on crude prices, and whether it would impact the centre's fiscal math. Here's what they had to say.
If anybody expected oil to hang around $40 a barrel, they were living in a fool's paradise. All right? We were seeing predatory pricing being done by OPEC, essentially to drive the shale oil producers out of business. It worked up to a point, but then they couldn't maintain it for very long. Now, what you should expect to see going into the future is essentially a two-person game. OPEC on one side, and the shale oil producers on the other. And I would imagine that you will see oil yo-yoing within a fairly limited band of somewhere between $60 and $80.
I heard Dr. Sen talking about this. I agree with him largely on his points, but I would just like to add something that for us, you know, 70, because we earn from nations that gain when oil prices are higher, in terms of remittances and etc. So the government gets taxes. You know, we've had a slowdown. Yeah. We were expected to gain from very low oil prices. We did not. Yeah. The slowdown continued. So I think we are seeing a recovery as oil prices become more normal. So, and at this level, it's healthy for the oil market itself, because you have supply being built up. Otherwise, you have zero supply and then an overshooting when demand rises.
Okay. So not terribly worried about the fiscal math, though, as Mr. Taneja says, chances are the government's hierarchy is first a marketing margin cut for the companies and then an excise cut if it comes to it. We take a break on that note. Coming up, an exclusive interview with the president and the CEO of the world's largest oil producer, Saudi Aramco.
Welcome to our special presentation, Crude Realities. Today has been an important day, not just for the crude oil prices, but also because Saudi Arabia's biggest oil company, Saudi Aramco, today has signed a pact with India in a planned 60 million ton refinery in Maharashtra. Getting to know the details of that and, of course, crude oil as a sector globally, we are now joined by Amin Nasir, who is President and CEO at Saudi Aramco. Mr. Nasir, hi, thank you so much for joining us. First of all, congratulations on the MOU that you have signed with India. Tell us more about the details of the deal. How much stake does Saudi Arabia, or rather Saudi Aramco, hold into this?
Yes, thank you. We are really excited about signing a MOU in the presence of the two ministers, the Indian ministers and our energy minister. This is definitely a major agreement between Saudi Aramco and three Indian companies, Bharat Petroleum, Hindustan Petroleum and Indian Oil. The three companies get 50% of this agreement and 50% for Saudi Aramco. This is a major integrated refinery and petrochemical complex, 1.2 million barrels per day, 18 million ton of chemicals in the so it is a major investment by Saudi Aramco in the Indian market.
Mr. Nasir, also tell us about the quantum of the investment in this deal that the Saudi Aramco is putting in. What is your sense on how much more are you looking at in sense of other areas being explored within India?
Well, you need to take this into consideration. This is a major undertaking. This is talking about here about $44 billion between us and our partners here in India. And definitely, we are looking at other opportunities in the Indian market. There is growth opportunities, and we are exploring these with other partners as well.
You know, the Indian PM today mentioned on how the math adds to and the estimate that 4.3% of energy consumption growth for next 25 years is what India is looking at. How do you look at this number, and how is Saudi Aramco really partnering or being part of this growth?
Well, as highlighted by the Prime Minister, it is 4%. The Indian market today is over 4 million barrels of import. You're looking at, by 2040, close to 10 million barrels of consumption. And that is very high growth rates, considering this is the fastest growth rate in anywhere in the world. The interest, we are the biggest supplier of crude oil in the world. We have the highest reserve available. We are the most reliable player in the market, and we are, as I said, we have a huge interest in the Indian market, and we are through this JV, which is 1.2 million barrels per day, and hopefully through other JVs we will continue to meet and participate in that growth potential in the Indian market.
Mr. Nasir, last time we spoke, it was very fresh on GST. How have you seen India settle down in its latest tax reforms, the policy reforms, etc., and what has your observation on that?
Yeah, we went through a lot of things and discussions with our partners, and all what we have looked at, it meets our requirements in terms of participation. And as highlighted by His Excellency today in the interview, that the reforms introduced by the Prime Ministers and all are on the right directions, helping bringing additional investment to the Indian market.
Mr. Nasir, I'm sure wherever you go, whoever you talk to, it is the Saudi Aramco IPO, which is a question that you get asked all the time. What is your sense? Are we still looking at the timelines being followed? Is it going to be the second half of 2018? Is the date pushed to 2019, though?
Well, from Saudi Aramco side, the process for listing Saudi Aramco is on track. Let me put it that way. It means the preparation for listing the company in the second half of 2018 is ready. The listing will definitely happen in the local stock exchange in the kingdom. With regard to which venue, which other market other than Saudi Arabia, and the timing, it's a process that is being looked at by the government. So when and where is the government will decide on the listing.
That would be all, Mr. Amin Nasir. Always a pleasure to have a conversation with you. Well, that's the statement coming in from Saudi Aramco, that investment is scarce when it comes to energy as a sector. And that's exactly what we have seen today. One of the biggest MOUs sound in the energy sector between Saudi Aramco and 3 of the major Indian oil companies as well. Well, that's all that we have on this conversation. Thank you so much for watching.